Hi traders, you're welcome back to the Forex Geek channel. If you're new to trading or struggling with complicated strategies, then this video is for you, okay? In this video, we are breaking down a simple technical analysis trading strategy for beginners that works across Forex, stocks, and crypto. Now, technical analysis does not have to be overwhelming, okay? By the end of this video, you will know exactly how to identify support and resistance, read candlestick patterns, and use trend lines and moving averages to make better trading decisions. Okay? If you are serious about learning trading, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss out on future content. Okay? Let's just get started. Now, the foundation of any simple technical analysis trading strategy is understanding support and resistance. All right, because these levels act as barriers. This is resistance level, this support, this support, this support. At this point, it was a resistance. Remember that when a resistance is broken, it turns into a support. So these were resistance. This was a resistance level, but at this point, after it was broken, it turned into a support. This was also resistance, then it turned into a support after it was broken. This remains a resistance because it's yet to be broken at the moment, right? Now this, you can see, it turned into a support. This, as it was broken, it was a support before, but then it turned into a resistance. And then this was a support, it was broken and turned into a resistance, and so on. So basically, these are called support and resistance levels. Okay. Now, these levels act as barriers where price reacts, and they are key to finding strong trade setups. For a support, it is a price level where buyers tend to step in, preventing price from falling further. Okay, while resistance is a level where sellers take control, stopping price from going higher. For beginners, one of the easiest ways to spot these levels is to look for areas where price has bounced multiple times in the past, at least 2 times. Okay, once you mark these zones, you'll have a clear idea of where price might react again. Okay, let's say price approaches a strong support level. You don't just enter a trade blindly, okay? You wait for confirmation, which leads us to the next step, candlestick patterns, okay? Candlestick patterns, they tell you the battle between buyers and sellers. As a beginner, you might want to just focus on 3 key patterns, okay, to help you confirm setup. And the 3 key patterns are the pin bar. The pin bar is a rejection candle, all right? It's a rejection candle, a long wick and a small body, signaling a strong rejection of price. You can see that it happened around here, right? And you can see that after that rejection, the price went up. Okay, the next candlestick pattern is the engulfing. The engulfing candlestick, you can see it happened here. It happens when a large candle completely engulfs the previous one, showing momentum shift. So you can see that happened here, right? Then finally, the last candle is the doji. You can see the doji actually occurred here. It also occurred here. The doji is a candle that has a small body with wicks on both sides. You can see on both sides. It indicates a state of indecision in the market. So if price hits a support or a resistance level and forms a strong bullish engulfing candle or a pin bar or any other candlestick pattern, right? The 3 main candlestick patterns we talked about just now are the pin bar, the engulfing, and the doji, right? So if price hits a resistance, for example, or a support, and you notice a reversal candlestick pattern form, maybe around the support, you notice a pin bar like this form, then you know that there's likely a reversal coming in or a pullback, and you can see that's what happened here. In the case of this engulfing, you can see that we actually had a sell all the way down to this point. All right, so this is why candlestick confirmation is important. It helps you to avoid false breakouts and improves your trade accuracy. Now that you understand support, resistance, and candlestick patterns, let's add one more tool, which are trend lines and moving averages. Now, as for trend lines, simply connect two or more swing highs or swing lows. You can see in this case, we just connected two swing lows, right? Then in this case, we're going to connect two swing highs. Yeah, we can see we connected two swing highs in this case, right? So this helps you visualize trend direction, okay? Trend lines, they help you visualize trend direction. Then as for moving averages is a simple indicator that helps to smooth out price action, all right? It helps you to smooth out price action and confirm the trend, okay? So for beginners, I recommend using the 50 period moving average as a trend filter. Okay, just set your indicator to be 50 exponential moving average, right? 50 EMA. Okay, so if price is above the 50 EMA, focus on buying. If price is below, focus on selling. This keeps things simple and prevents you from trading against the trend. All right, when the moving average lines when the moving average lines up with a support level or a trend line, it's an extra confirmation. Like you can see what happened here, how the moving average gave a buy signal here, and the trend line also supported that alongside this horizontal support. So when you have the trend line and moving averages and and your horizontal support and resistance levels saying the same thing, it adds to it adds a layer of confidence in that trade. Now let's put everything together into a simple technical analysis trading strategy for beginners. The first step is to identify key support and resistance levels on your chart. Okay, once you have identified these important levels, then you look for price action confirmation using candlestick patterns. Okay, remember we talked about three main candlestick patterns for beginners: pin bar, engulfing candle, and doji. All right, now there are a lot many other candlestick patterns, okay, but I just decided to focus on these three for beginners. All right, then after you have gotten a candlestick confirmation, check your trend direction. Ensure that your trend direction is the direction that you are going to be entering your trade in. If it's a buy trend, you look for only buy trades. If it's a sell trend, you look for only sell trades. Okay, the moving average is going to help you automatically identify the trend direction. Okay, then you enter a trade with a clear stop loss below support for a buy trade. If you enter a buy here, you set your stop loss below the support. But if it's a sell trade, you enter, you set your stop loss above the resistance. Then you set your take profit target at the next key level, right? For a buy trade, you can use resistance levels for your take profit. For a sell trade, you can use support levels, right, for your take profit. Okay, so that's it. This simple strategy helps you trade with confidence without relying on complicated indicators. If you found this video helpful, hit the like button and drop a comment letting me know which parts of technical analysis you struggle with the most. And if you're serious about mastering trading, subscribe to the channel and turn on notifications so you never miss a new trading strategy breakdown. See you in the next one. Happy trading.